Well, one of China's leading ladies of film is in Australia, but she's not here to spruik a new movie. SBS Finance editor Ricardo Goncalves joins us now. And Ricardo, she's got property on her mind.
Janice Liu Xiaoxing is here making a documentary to be broadcast in China about the Australian way of life, and it could do what Oprah did a few years ago and bring in more tourists and possibly more investment. And it comes at a time foreign buyers are continuing to snap up property. 11.5% of all new property sales are going to foreigners and more than 16% of all apartments. And they're buying more existing homes despite tougher rules.
Come through.
Liu Xiaoxing is used to the camera. Back in the 1980s, she starred in dozens of Chinese films. Now she's turned her hand to documentary making, Sydney and Australia her subjects.
就是介绍澳洲的风光和以及风土人情，吃喝玩乐。
Australian property will also be featured and broadcast to as many as 400 million Chinese viewers, potentially boosting interest. Liu's been travelling to Australia for 5 years on a professional visa and is also looking to buy.
现房，肯定的。我不喜欢麻烦，我就喜欢一拿来，一到这里就可以住。
It's a trend noted in NAB's latest residential property report. Total foreign demand for new homes decreased from more than 15% in the first quarter to under 13% in the 3 months to June, but they've increased their share in existing housing markets to more than 8.5%.
In some cities like Melbourne, it was 16% of the existing stock. Sydney was 10%, and most of the other cities was much lower.
Many of them won't be occupied.
Probably 20% of them aren't going to turn the lights on. It's a long-term play that they're basically saying this is a good investment for the future. I don't care if I get any yield in the short term, and it's cheap.
Developer CBRE, however, says many Chinese investors are diversifying, spending as much as $5 million on commercial properties.
There seems to be a preference at the moment for them to buy small shops, small office buildings and small industrial properties.
As for Australian property buyers and mortgage holders, official interest rates look set to remain on hold for some time. Reserve Bank Governor Glenn Stevens said today he remains open to further rate cuts if warranted, but is surprised at the strength of the employment market.
The economy is making the adjustments we needed to make, a bit more slowly than we would prefer, but it is making them.
And adding to the case for holding interest rates is the latest inflation data. The underlying measure, which the RBA tracks, came in at 0.6% in the June quarter and 2.2% for the year, at the bottom end of the 2 to 3% target band of the RBA. So what went up in price over the past 3 months? Well, petrol was number one, up 12.2%, followed by hospital services and new dwelling purchases by owner-occupiers. The biggest fall was for domestic holiday travel and accommodation and for medicines. Let's take a look at the Australian share market now, which had a bit of a shocker today. The All Ords ended its 6-day rally with the big banks suffering losses. The Australian dollar is buying a little over 74 US cents and is mostly stronger against the other major global currencies. On the commodity markets, gold is down, oil is stronger, and on Wall Street, shares closed lower with some disappointing corporate earnings, including the world's biggest listed company, Apple. Profit surged 38%. It sold more than 47 million iPhones, but that was well below expectations. So investors took a big bite out of the company's share price. $84 billion wiped, and there was no real update on how popular the Apple Watch has been. And that is the day in finance.